Hi, I'm Joe Neighbour from Signal Centre, and this is a quick preview of Apple's earnings ahead of their release next week on 28th of October. In terms of the expectations from the management, they are expecting sharper growth in the fourth quarter of this year, albeit at a slower rate. Clearly, supply constraints will be impacting the company, and we'll all be waiting to see how the company has navigated that when the results are released next week. In terms of the analyst expectations, they are expecting a strong quarter from Apple. The consensus suggests that there should be double-digit revenue growth and bottom line growth during the latest period. The key things to watch on the announcement itself, first of all, will be in terms of the iPhone sales. This is by far Apple's biggest product segment. The new product was launched in the final week of the last quarter, so we will get a bit of a read on how numbers have gone in that period. And also we'll be looking for revenue guidance and how well Apple has managed to navigate the supply chain issues that are being faced globally. So in terms of what to expect, the estimates for the earnings per share have been set at 1.23, and in terms of estimated revenue, we're looking for the region around about 85 billion in terms of revenue. So those will be the key numbers to keep an eye out for come Thursday next week on the 28th. In terms of looking at the price action and the technical set up for Apple and where we believe price could go in the events that they beat earnings estimates or they come in below, this is a daily chart for Apple that we have in front of you at the moment, and I've segmented when we've seen previous quarterly earnings over the last 4 periods so we can get a bit of an understanding as to how price has reacted based on those earnings announcements. And mostly we can see, in fact, in all of the last 4 circumstances, we can see that numbers actually came in better than expectations. Lots of green here on the surprise factor that you can see here on the chart. And in each of these scenarios, they've beaten estimates. So in terms of how prices reacted, these have been highlighted by the blue arrows on the chart. And as we can see here, the initial reaction from the earnings, despite them beating, was actually to the downside. Prior to that, then bottoming out and seeing quite a substantial rally take place over the next quarter. It was actually the next round of quarterly earnings that actually stopped the bullish momentum there, and then we saw quite a reasonable corrective move to the downside. Again, we saw a correction following the next set of results in April 21. And then most recently, following a very sharp move to the upside, we actually saw a bit of stalling in the price actually. We're pretty close to where the price actually was trading around last quarterly earnings, and the price hasn't actually done too much in the last quarter. But in terms of the technical setup and where we're at right now, I've got highlighted on this chart here this yellow corrective channel that's taken shape in recent weeks. And this has been pretty much seen across the board in global markets. We have seen some corrections. Obviously, supply chain issues are starting to impact. We've seen rising gas prices, all of which is going to have an impact on the consumer pocket over time. What we have on the right hand side of the chart is some technical levels that we're looking at. So where do we believe price could go in the event that we see a disappointing earnings announcement, or if things are actually to surprise on the upside? Apple always comes with some lofty expectations, that much we know. We always know that the price is, geared to move higher. Certainly we often see price moving higher into the earnings event itself, and I don't think we're seeing anything different this time round. Price was high yesterday. We posted a really nice bullish engulfing candle. That comes on the back of a bullish day previously, so just a sign of more continuation higher by the looks of things in the short term. But in terms of the key levels to watch, technically, the first level we've got is this key swing low that we posted on the 4th of October. That comes in at 138.29. Now, I quite like that level because it seems to marry up quite nicely with this uptrend line that we have on the daily chart as well. So I think any dips to this kind of level would probably represent a decent opportunity to buy. If we do get a closing break of this trend line, then we maybe need to start getting a little bit more concerned in that it could spark a more general correction. It's whether or not Apple is considered a bit of a bellwether for the tech sector, and whether or not it's going to have an unraveling effect on other markets and other stocks as well within the tech sector. 135.05 is the next level down. That is a key support from these highs over here from the 19th of April earlier this year. I think we can still maybe see a reaction down to this level, and provided we don't see any sort of significant closes below this trend line, this still could be a really good opportunity for us to look at buying dips in Apple. Below that, we are actually looking down at these swing lows here that were posted back in March earlier this year. these lows down here that were posted in April and May this year, which come in around about 122. So down here, you will often see, I think, we'll probably see some value hunters trying to step in and take advantage of the corrective move lower in Apple. From a technical perspective, yes, there might be some value there, but I'd be more concerned about the break of the short-term trend, and that may signify that we're going to see lower prices for a period of time. On the upside, the key levels to watch, first of all, is this 157.46. That's the previous swing high that we posted here on the 7th of September. That'll be the first level that the bulls will be looking to take advantage of, maybe to set some limits around that level to take profits if you're already long. An extension of that, we're looking for 165, which is a nice round psychological area to try and target. And of course, we're up at fresh highs here, so we don't have a huge amount to reference in terms of supports and resistance levels once above these areas. Above that, I've got a level at 177.55. This is actually a projection of what I'm calling a flag setup here on the daily chart. So suggesting that this was the bottom of the flag. This is actually a flag, so suggesting a continuation higher, and then it projects prices up towards that 177-ish level. So plenty of potential in the upside, as always with Apple, which we've become used to. But of course, earnings is a separate issue really. There can be lots of volatility, so do be careful if you're trading and bear these levels in mind. Hopefully that's been useful. We'll be back again soon with some more earnings previews. Until then, trade safe everybody. Goodbye.